There is a payment platform in Lagos that processes over 1 billion transactions every month. There is a digital bank in Cairo that has disbursed more than $2 billion in loans across Egypt. And there's a savings app in Nigeria built by 3 young Nigerians that quietly turned millions of first-time savers into first-time investors. And there's a payment network out of Johannesburg that has connected more than 500 million mobile money wallets across more than 40 African countries. The operators building these companies were not waiting for global press to notice them. They were building because 44 million African small businesses needed digital infrastructure that did not exist. Because a cash economy cannot support a modern economy. And digital payments are the layers that everything else is built on. This episode is about the operators building the financial layer of Africa's modern economy, the money. Welcome to Mbuni. I am Gideon, and this is the show about Africa entering the modern age. Today's deep dive is about the money. The African fintech operator are already at scale, already profitable in many cases, and already reshaping how 350 million African consumers and 44 million African small businesses actually buy, save, borrow, and move value across the continent. Stick with us to the end because that is where we get to your move. The signal. 3 stories from the week. 1. When Michel Olegbe founded Interswitch in 2001, Nigeria was still recovering from its longest banking crisis in modern history. Card transaction barely existed. Bank-to-bank transfer took days. He built a company that fixed that. 24 years later, every card you swipe in Nigeria, every ATM you use, every transfer between 2 Nigerian banks flow through infrastructure that Interswitch built. Nigerian commerce runs on rails an African company laid. Visa took a minority stake at a $1 billion valuation in 2019. Interswitch is now approaching a public listing that could reshape Africa's fintech market when it happens. Africa's oldest fintech unicorn, still African-owned, still run by Olegbe. It has been quietly running Africa's commerce since before most of the newer fintech listeners were adult. 2. There is a company in Cairo that has quietly become one of the largest lenders to unbanked Egyptians in the country's history. It is not a bank, it is an app, MNT-Halan. Started in 2017 as a ride-hailing platform. Its founders, Muna Nala and Ahmed Mohsen, watched their drivers act for small business loans against upcoming earnings. They realized that they were sitting on a lending business hiding inside a mobility company. Today, MNT-Halan has disbursed over $2 billion in loans across Egypt. It is a unicorn. Egyptian headquarters, Egyptian-owned, Egyptian-led. It is quietly proving that the largest African-owned financial companies do not need to leave the continent to reach global scale. 3. Try sending money from Nairobi to Lagos through a traditional bank. Fees eat 15%. It takes days. Both parties pay for the privilege of moving their own money. Dare Okujo noticed this in 2010, working at a mobile money company in Johannesburg. Africans were being charged foreign remittances rates to send money to each other across continent that theoretically shared open trade. He founded a company called MSF Africa to fix that. 15 years later, it is called Onafriq. It connects 500 million mobile money wallets across more than 40 African countries. Send money from Nairobi to Accra, from Lagos to Dakar, from Cairo to Johannesburg, and it arrives on the other end within seconds. The infrastructure that makes an intra-Africa payment work was built by an Africa out of an African city for African customers. Most listeners would not have heard of it before this episode, and that is the story. Three stories, same direction. The financial layer of Africa's modern economy is being built, and the operators building it are already at scale. If you want all three of these stories in your inbox by tomorrow morning with sources and company links, sign up for the Mbuni signal at mbuni.space. Link is in the show notes. The deep dive. Let me describe the ground truth of the African common as it stands today. Because to understand what African fintech is building, you first have to understand what it is that they are building against. Roughly 90% of the transactions across the continent are still cash-based. Roughly half of Africa's adults remain outside the formal banking system, and 44 million small businesses across Africa operate without any digital payment infrastructure. And yet, mobile money adoption in Africa is now the highest in the world. More than 800 million active mobile money accounts across the continent. More than $1.4 trillion in mobile money transactions moving through those accounts every year. Kenya alone runs a mobile money economy larger in transaction volume more than most European countries. This is the paradox African fintech operates inside. A cash economy that is enormous. A digital opportunity on top of it that is enormous. And a bridge between these two that is being built right now mostly by African operators. Digital payment across the continent are growing roughly 20% per year. The market is on track to reach $40 billion in annual transaction value by 2027. And African fintech attract $3.4 billion in venture funding in 2025 alone. Now, here is the part that most global commentaries misses. African fintech has had to be profitable from the start. Capital was scarce for most of the last decade. Founders could not simply burn investor money for years while they figured out how to monetize. The company that survived built sustainable businesses that charged for real value delivered to real customers. Now that those businesses are proven, capital is flowing back into the ecosystem. This time towards operators with actual revenue, actual customers, and actual path to further scale. Let me walk you through the operators actually building the African layer of the modern African economy. Starting with the ones that are African-owned all the way through the cap table. Interswitch, founded in Lagos in 2002 by Michel Olegbe, 24 years old, Africa's oldest fintech unicorn, and still substantially African-owned and Africa-led. Interswitch operates the payment switching infrastructure that Nigeria's banking system depends on. The invisible plumbing that clears bank-to-bank transfer and powers ATM network and runs the card payment ecosystem for the largest economy in Africa. The company launched the Verb card schemes, now one of the most widely issued payment card on the continent. It operates in more than 23 African countries. Visa took a minority stake at a $1 billion valuation in 2019, but Olegbe still runs the company. And Interswitch remains at its core an Africa infrastructure company built by Africans for African market. MNT-Halan, founded in Cairo in 2017 by Morno Nala and Ahmed Morsen, started as a ride-hailing and micro-lending platform. Now the largest financial super app in Egypt. Wallet lending, buy now, pay later, e-commerce and insurance in a single integrated product. The platform has disbursed more than $2 billion in loan to underserved consumers and small businesses across Egypt. It became a unicorn in 2023, and it remains Egyptian headquartered and Egyptian control at the leadership layer. MNT-Halan is the proof that Africa-owned unicorns can reach global scale from African soil. PiggyVest, founded in Lagos in 2016 by Odunayo Eweniyi Somtoifezwe and Joshua Chibueze, the largest digital saving platform in Nigeria, and one of the very few African fintech companies that has been profitable for years. The platform has now more than 4 million users. It has mobilized over $500 million in savings from everyday Nigerians. And it is entirely Nigerian owned and Nigerian operated. PiggyVest is what happened when African consumers finally get financial products designed for them, rather than adopted from Western banking models. Onafriq, founded in Johannesburg in 2010 by Dare Okujo under the name MFS Africa, rebranded to Onafriq in 2023. The company now connects more than 500 million mobile money wallets across more than 40 African countries. Onafriq is the infrastructure that makes cross-border African payment actually work, moving value between M-Pesa in Kenya, MTN Mobile Money in Ghana, Orange Money in Senegal, and dozens of other wallets that used to be walled off from each other. Onafriq is Africa-founded, Africa-owned, and quietly one of the most strategically important pieces of financial infrastructure operating anywhere on the continent. 4 companies, 4 different categories of fintech payments infrastructure: financial super app, saving and investment, cross-border payments, Africa-owned protagonists, all at scale right now on African soil. Africa-founded operators at scale. There is a second tier of African fintech that must also be named. Africa-founded operator that raised significant Western capital, that in some cases moved their headquarters offshore, that are still built by African founders saving African customers at continental scale. Flutterwave, founded in 2016 by Nigerian entrepreneurs Inyoluwa Abuyeji and Olugbenga Agbola, now Africa's most valuable fintech at $3.2 billion valuation, processing payments in over 35 countries and 150 currencies, more than 1 billion transaction processing since founding, more than $50 billion in transactional value. Preparing for a public listing. The company is headquartered in San Francisco. Its cap table includes Ripple, Tiger Global, Visa, MasterCard, and Avenir. The founding story is Nigerian. The operational reality is largely African. The current cap table is largely Western. That is the honest reading of Flutterwave. Moniepoint. Founded in Lagos in 2015 by Tosin Enioloroda and Felix Ike, originally called Team Apt, now processing more than 1 billion transactions monthly, over $22 billion in monthly payment volume, serves more than 10 million businesses and individuals, reached unicorn status in October of 2024. Still Lagos headquartered, founders remain Nigerian. Operators remain deeply local, but the cap includes DPI, Google's Africa Investment Fund, QED, Verot, and Lightrock, operationally African. Financially foreign capitalized. ChipperCAD, founded in 2018 by Uganda's Ham Serungoji and Ghanaian Majid Mojaled, one of the few African-founded fintech companies to have expanded into the United States remittance market, taking African bill payment infrastructure and turning it outward towards the diaspora. The company reached a $2 billion valuation in 2021. Current valuation sits closer to the 500 million to 1 billion range, following the collapse of FTX, which had been a significant investor. ChipperCash is headquartered in San Francisco. Its founders remain African. Its customer base remains Africa. The big point across these 3 companies: 6 African founders, Ibuyoji Agbola, Enio Oloroda Ike, Serengoji, and Mojalid, built fintech companies that reached hundreds of millions of African customers. The capital came from where it could come at the time these companies were raising, which was largely Western, because the African institutional capital pools that would fund fintech at this scale did not exist in the mid-2010s. The next generation of African fintech companies are being funded increasingly by African capital, which we will get into in your move. For this section, the point is simply that African founders build these companies, and whatever the current cap table looks like, the vision, the leadership, the operational reality behind them is unmistakably African.
The advantage. Africa is one of the largest fintech opportunities in the world, and the growing number of the operators building at the top of that market are not African. Wave, founded in Senegal. Founders, American. Yellow Card, operating across Nigeria, Kenya, South Africa. Founders, American. OPay, Nigeria's most used mobile money application. Parent company, Norwegian. Controlling investors, Chinese. PalmPay, Nigeria's second largest mobile money application. Owner, Chinese-backed Transsion Holdings. Copia, Kenyan e-commerce and consumer finance. Founders, American. M-Kopa, the East African asset finance company, covered in a previous episode. Founders, Canadian, British, American. Sun King, the largest off-grid solar and financing operator in East Africa. Founders, American, based at Stanford. These are not small operators. They are among the most funded, most covered, most scaled financial technology companies operating on the African continent right now. And they have something in common that African founders do not have. Access. Access to Silicon Valley venture capital during their formative years, when African venture capital did not yet exist at scale. Access to Western Development Finance, the IFC, the DFC, British International Investment, Proparco. Access to Stanford, MIT, Imperial College. The networks that decide who gets a first check. Access to LP capital in London and San Francisco that only funds founders who look and sound like the people writing the checks. Access to legal firms and structuring advisors who set up cap tables in Delaware and the Cayman Islands as a matter of routine. And access to global press coverage that turns a foreign-founded African fintech into a magazine cover before African-founded competitors of similar scale are named at all. This is not a comment on the quality of the products these companies build. Wave lowered remittance fees in Senegal. M-Kopa financed millions of solar systems. PalmPay is used by tens of millions of Nigerians. The products are real. The market impact is real. The pattern that matters is who captured the equity value while those products were being built. Because when Wave sells, the exit flows to San Francisco. When OPay exits, the exit flows to Beijing. When M-Kopa lists, the exit flows to London and Tokyo. When Sun King eventually lists, the exit flows to Stanford's alumni network. The African customers stay African. The African employees stay African. The African tax base stays African. But the ownership walks off the continent. That is the advantage. And it is the pattern the next generation of African-founded fintech operators, Interswitch, MNT-Halan, PiggyVest, Onafriq, is finally beginning to interrupt.
What this still doesn't fix. Now the hard truths. Honestly, and without softening them. 1. Cash is still king across most of the continents. Roughly 90% of African commerce still happens in physical currencies. Every operator we have named in this episode depends for the next wave of growth on converting cash-heavy consumers and businesses into digital users. One transaction at a time. That works slowly. It is expensive. And it requires the kind of trust that takes years to build in markets where the memory of failed banking system, current devaluations, and inaccessible formal financing is still fresh. 2. The African banking layer is still deeply fragmented. 40 plus different central banks, 40 plus different regulatory regimes, 40 plus different mobile money ecosystems that do not fully interoperate. Onafriq is one of the operators solving this fragmentation, but the underlying complexity means that cross-border African payment remains more expensive, slower, and less reliable than intra-Europe or intra-Asia payments. The infrastructure to change that exists in pieces. The political harmonization across African central banks does not yet exist at continental scale. 3. The cap table dependencies on foreign capital remains high. Flutterwave, Moniepoint, Cheaper Cash, Kuda, all raise primarily foreign capital during their scale phases. This is not the fault of the founders. It is a reflection of the capital environment that exists when these companies were raising their growth rounds. African institution capital, pension fund, sovereign wealth fund, corporate treasuries is only recently beginning to deploy into African fintech at scale. Ghana's pension mandate, Nigerians pension fund, allocation reforms, Egyptian's foreign capital are all beginning to change this. But African capital is still catching up to African talent. And closing that gap will define the next decade of the ecosystem. 4. Regulatory risk is real, and it is not going away anytime soon. Flutterwave's licensing troubles in Kenya took years to resolve. Central banks across continents are working out how to regulate fintech in real time. Some jurisdictions are getting the regulatory framework right. Others are lagging significantly. Every founder building in African fintech is navigating regulatory uncertainty as a permanent operating condition. 5. The fraud and cybersecurity threats are scaling with the industry. The fraud and cybersecurity threats are scaling with the industry. The biggest these platforms get, the more attractive they become as targets for organized fraud. Every operator we named in this episode has at one point faced serious fraud incidents. The African fintech ecosystem is investing heavily in fraud detection and cybersecurity. But this is an ongoing arm race, and it will continue to be one for as long as African fintech continues to scale. That is my read for what this build still does not fix. If you're working in African fintech as a founder, an engineer, an operator, a regulator, or an investor, I want to hear what I got right and what I got wrong. Drop a comment on YouTube, on Spotify, or on LinkedIn. The point of this show is to track the build together, not to lecture about it from a distance. Your move. The 3 things you can do this week, and then 1 for the founders in the fight. 1. Use African fintech in your everyday financial life, wherever and whenever the option is available. If you are in the diaspora sending money home, PiggyVest, Flutterwave, Send app, and Onafriq networks are all real options. They keep more of your money in African hands than Western Union or MoneyGram. They keep more of your money in African hands than Western Union or MoneyGrams do. And they typically clears the transfer faster and at a lower fee. If you run a business that touch African customers, Flutterwave and Moniepoint and Paystack all offer payment infrastructure that clear African transaction faster and cheaper than global processes. Integrating one of them into your checker flow is a direct action you can take this week. 2. Watch the African fintech operation on both the public and pre-public markets. The next 12 to 24 months will bring several major listings that will reshape the landscape. Now, a major quick note before I give specifications. This show is not a financial advice. I am telling you what is being built and where. What you choose to do with your money is your own decision. Interswitch has been rumored for a public listing for years and could reach the market soon. Flutterwave is preparing for its own IPO. MNT-Halan, Moniepoint, PiggyVest are all likely candidates for public offering over the next several years. For public exposure right now, MTN Group on the Johannesburg Stock Exchange gives you exposure to Momo, one of the largest mobile money operator in the continent. Safaricom on the Nairobi Security Exchange gives you exposure to M-Pesa. Both are dominant financial infrastructure players operating at continent scale. 3. If you build for a living as a mobile engineer, back-end infrastructure specialist, compliant officer, product manager, or a fraud analyst expert, African fintech is one of the fastest hiring sectors on the continent. Interswitch, MNT-Halan, PiggyVest, Onafriq, Flutterwave, Moniepoint all have opening roles right now across their African offices and remote. The financial infrastructure of the continent is being staffed in real time. If you have the skills, there is a seat waiting for you in this build. And one more for the underdog. If you're an African-founded fintech company grinding close to your next round, the capital environment is genuinely shifting in your favor. And it's shifting in a direction most global commentaries has yet fully registered. African VCs writing fintech check right now include Venture Platform, Softy Inc. Capital, Nova Star Ventures, P1 Ventures, and Partech Africa's Dakar and Nairobi offices. Africa 50 and the African Development Bank both now have fintech adjacent mandates. Ghana's pension mandate is unlocking new institutional capital. Nigerian pension fund administrators are increasing their alternative assets allocations. Egyptian foreign capital is entering the fintech category. Family offices across Lagos, Cairo, Nairobi, and Johannesburg are actively deploying into the sector for the first time at a meaningful scale. The money you could not raise from Africa 5 years ago is starting to come home. Keep building. The financial layer of the modern Africa economy has your name on it, if you're bold enough to claim it. And one last thing, for native Africans and for the African diaspora everywhere. For decades, when African money moved, it moved out. Remittances went through Western Union at 10 to 15% fees. Savings went into foreign banks that charged you to hold your own money. Investment capital raised on the continent got packed in London, Frankfurt, and New York. The financial infrastructure was foreign. Extraction was quiet. And most of you were told there was no other alternative. That is changing now. The remittance corridor is being rebuilt by African operators charging a fraction of the old fee. The savings platforms are Nigerian. The payments networks are Pan-African. The lending is Egyptian. The capital is coming from home. Ownership is moving home. Decisions are coming home. Stay with Mbuni. We will keep you in the loop and we will keep you informed on what is opening up for you and for the continent. Here is the thing about money that is easy to miss. Every economy in human history has been shaped by the operators who controlled how value moved. The banks that cleared trade in medieval Venice, the clearing houses that built modern London, the card network that scaled American commerce in the 20th century, and now the financial layer of the modern Africa economy is being built. The operators building it are African. The customers they serve are African. And increasingly, the capital funding them is African too. If this episode landed, share it with one person, especially anyone who thinks African fintech is about payment apps. The Mbuni Signal newsletter goes out every week, tracking the build in real time. Sign up at mbuni.space. Next episode, we leave the money and go to Silicon Valley. Africa's semiconductor independence, the chip designers, the packaging plant, and the state initiative quietly building Africa's entry into the global chip supply chain. Drops next week. I am Gideon, and this is Mbuni, Africa in the Modern Age.
Welcome to the Central Nexus. The train arriving is bound for the Northern Spire. Please stand clear of the doors.
Look up there, isn't that incredible?
It's beautiful.
Satellite trajectory holding steady over the Zambezi tracking station.
Confirmed. Atmospheric distortion minimum. Now, zoom in on the cellular structure of the heart.
We must ensure the balance between neurons. These maps show the power of